Hey, bro. Damn, we can't hear you.
Okay. Apologies, guys. I noticed that you can't hear me earlier, so and I couldn't hear you guys neither. So I hope you can hear me now.
Yeah, sure.
Beautiful. Thank you very much. All right.
You're welcome,
Yes.
bro.
Thank you. Okay. So quick one. I can't remember what we traded last week because I think I deleted the notes, but I hope you guys had a very good trading week last week. And I hope everything gone good. So today, one thing is we're gonna go through normal analysis today, and then if I have time at the end of this, I would point out something new uh, that actually really works a lot better in trading and gives more peace of mind. But hopefully, we have time to cover that. And also, I noticed quite a few people are struggling with capital to trade now. The main reason I did the poll is to understand better what position a lot of people fall under. And if a lot of people fall under the categories of not having enough capital to trade, that could be a major challenge, So what I would recommend is if you don't have enough capital, demo trade for now to when you can get the capitals. And I know there's quite a lot of companies out there that say they will give capital. The main reason I'm a bit skeptical about that, and I was having a chat, I even had to ban one person on that, is because um, when a company tells you that, look, I'll give you money and you trade for me, and whatever you get, we'll split it. And then before you join, you have to pay a certain amount of fees to join to be that. They already know that if you're not good at trading, the possibility is you will not pass their test. And if you don't pass their test, you just lost that money just because of you wanted the opportunity to be able to trade a very big account. So I personally would say those companies, some of them might be reputable, some of them might be good, but before you join those company, make sure that you have your trading in check. Just in case if they're good and they're okay, you want to at least pass the test. You don't want to waste or burn your money, while doing those tests that they have. So far, I haven't found one that is highly reputable. I mean, the ones that I looked at when I checked the terms and condition, what they said is throughout the entire state, even when you trade a real account, you still trading demos. So I'm not sure about that, but regardless of whichever one that you find to fire works, then that's good. And if it works, please do share it. With there's quite a few people that needs this too. So if you find something that works, please do share with everybody else. Thank you guys. Okay, so today we're gonna move to straight on analysis. So I'm just gonna load on notes for a second. All right, let me just get my notes up and the same the same way that I do things always. Everything is quite repetitive. Making money sometimes can be very boring. So it's gonna repeat just exactly the same steps that I do before and see what opportunities we might get. So first things first. Oh, before I actually started, so guys, Aslan, I don't know if you guys know about Aslan, but Aslan is very ill, and he messaged me. So please, if you can, you guys check upon him, and if you can, just keep him in your prayers. So please, if you can do that, that would be great. So back to trading. Now, gold, looking at this COT report, we can see there's not much, going on right here. They're not adding new positions. So for that reason, we're not trading gold this week. Go next to CHF. CHF looks like they're taking massive position away from their long side, moving towards their short. Because there's no new position added to their shorts, ideally, I would not trade this, but I can look at it. If you look at the COT graph, for example, you're most likely going to see a dip. Yeah, there we go. So the commercial is dipping right there. So if we have no other asset that aligns properly, we might come back to CHF, right? But for now, we skip that. We move to the next one. Right, JPY, same thing. It's most likely going to dip to the downside if we look at the chart. because right here it looks like they took out more position on the long side than the short side. Okay, let's see what that's saying. Yeah, we have just a tiny bit of dip right there, so that's okay. If we don't have anything else in the lines, we're gonna come back to them. So euro, we have 11,000 looking to the downside. Beautiful. So what we're gonna do now is first check euro. So we go euro, CLT, all right, short. All right. Now we can see they had it positions to the long side as well, but overall they had it more position to the short side, and overall they have more positions to the shorts anyway. But the only challenge is these guys are not adding any position, so there might not be a lot of liquidity in the market. It might be a little bit stagnant on the euro side, but we don't know yet. We might see that coming anytime soon. So because it dipped on that, what we can see right here is today's the 7th, right? So we could see euro start falling from tomorrow, and the fall could end sometimes on the 11th. So 7 right here. Okay, so Monday to Thursday, we might see euro going all the way down. Okay, so from the get-go, euro could dip all the way. So COT short, go seasonality as well. All right. So let's just check the probabilities of euro. Let's see what we can find on the euro asset. So we don't need this anymore. Swing right back to probability. And please, if you have any questions, please just type it up. I will be able to answer from there. Or if you have a specific asset you want me to look into, I'll look into that. I want to try to go through this very quickly so I can explain something at the end of the webinar to you guys, something that might be very beneficial to quite a lot of people. All right. Okay, I'll check Gbp Usd. So if you have any other thing you want me to check, just place it down there and I'll be there as well. All right, so seasonality is actually right here. COT right there. So we know that the 8th. So what's the 8th? I remember. So we can see euro CHF. Euro seems to dip on the 8, 9, 10. But on the 11th, it doesn't dip, but it still dipped on the Friday for the 12th. So we're going to go to euro CHF. Let's see what we can find right here. Oh, right. Apologies, takes me a while to find these things. All right. So what we can see so far is euro is already dipping anyway. It's been dipping for a while, but if we check the seasonality, seasonality shows that it's meant to dip also from around the 17th of October and also the 29th. So if we check those two days and everything seems okay, then we might be good to go. How do I hide this thing? Hey, I'm trying to find a way to hide this thing. I don't know how to do it. All right. So we're gonna go. So it didn't dip on the 17th. Actually, it literally the 17th was was literally a weekend. So then dip on the 18th. It delayed, but started dipping from the 20th, and then 29th is the next day. 29, it did that clean dip right there. You see that? So what's quite massive. And now we're expecting the dip to continue. So looking at this, for example, we already know that, this zone right here, price is broken out of this zone right here. Price consolidated here for 3 days, but wasn't able to break, but eventually broke out right here. So what we're going to look for is ideally where would euro pull back to before it even falls further. And I like to use the support and resistance. It helps me quite a lot to pinpoint certain angles I might not be looking into. So because I know it's already going to happen sometime tomorrow, what I'm going to do is, I'm trying to look for a resistance point, but I can't find any. I don't really like to go down to 30 minutes to go look for a resistance point, but I can't find any from the PZ. But from 30 minutes anyway, I don't really like to go there. But from 30 minutes, what I can see is right here and right here could be a point of resistance, right? So what I'm gonna do, what I'm actually gonna do is I'm gonna scrap this and I'm gonna go plain chart with EMA, and I'm gonna load that back up again. So what I'm trying to see is there any correlation between the moving averages and where the resistance are gonna be? So what I can see is 200 moving average sent it back down here on a 30-minute, but on a daily, on the 4 hours, I can see that we have 20 right here. So 20 has been doing a good job keeping it down. So I'm gonna aim for the 20. All right, it's just about 10 pips away. But the 50 is also right there. So my entry is actually gonna be very wide.
What's up
Huh?
for me?
What did you say?
Give me my
Please type it up. I can't hear you properly. Your audio isn't clear. Thank you. So with the euro, for example, so I'm going to be looking between 20 and 50 EMA. Ideally, I would like it to gap to the upside. If it gaps to the upside, for example, I'm definitely going in from the 50, shorting that from the 50. If it doesn't gap to the upside and gaps to the down, then probably 20 will be the best option to go into. But what I would say is this, right? With this asset, the asset is going short. We should be looking for short from tomorrow. But what you want to do is you want to be very careful, especially when you want to short it. But if you look at the ATR, let me, what is it? ATR in here. If you look at the ATR, for example, the ATR on the 4 hour gives us an average of 20 pips, right? Now, your stop loss will not be 20 pips in this scenario. I would actually, emphasize your stop loss be about 40 pips. Now, because this trade is going to be for, let's say, 4 days, for example, 5 days, almost the entire week, 40 pip. Someone might someone's might keep on muting himself. Please keep yourself muted for a second while I just explain this, and then we come back and talk. So yeah, what I would say is that around this region would be your best option to look for entry. It's about 29 pips wide. Now, if you have indicators, for example, that tells you when to short, you can put like your indicator, like a PZ indicator in there, your day trading, whatever short indicator you have. So if price comes between this zone, you can go on a lower time frame, maybe 15 minutes time frame, and within that zone, if you find a short signal, you can sell from there. Ideally, I would say if price comes between the 50 and the 20 on I think that was 4 hours, on the 4 hours, then what you want to do is you want to sell at the 50, right? There is a possibility price will break through the 20 and get to the 50. But the good part is if you get it anywhere here, your stop loss can be behind the 50. So about 40, 41 pips long, which is around the ATR ratio times 2 anyway. So you should be perfectly fine with that trade. So Euro CHF would be a sell. All right. So Euro CHF, so short. All right. Now let's look at that Euro asset and see what we can find. So see Euro JPY. All right. So same thing applies for Euro JPY. We can see that short coming in from there. And actually, this one looks a lot more smoother than the CHF. So Euro JPY also, in this scenario, for example, I'm just going to go back to plain chart. All right. Put that aside. And let me find Euro JPY. There we go. So Euro JPY is also looking like a short. Now, from what I can see here, Euro is already falling from, what date is this? I don't know why my Zoom is stuck like that. Well, it's already falling from around 21st, or I can't see what is behind there. So from the 20th. So if Euro is already falling from the 20th, if we go back to the seasonality chart, see if maybe we have a drop from that 20th, we might be good to go. Yeah, so 28 right here, we actually had that drop indicator, and that was the maximum point you got to. So it's actually following, Euro JPY is actually following this at the moment. So the likelihood of it continuing following this is very, very high. So what you want to do is, and also the 29, the drop from the 29 from the seasonality actually did the drop. And from this one, I can actually see a spot that I would actually like to go in. This is much clearer. Anywhere between this zone is fine for me. So I just want price to pull back, ideally gap to the upside, then pull back to this, not that region, to this region right here. So anywhere within this region is okay for me to go into the trade. Okay, so playing chart with EMA. And look, 20 EMA is right there. So what you want is prices stop between 50 and 20 right now. And most likely price will break and come to the downside. So TP will be around the 200 EMA right here. So my entry will be around here. So you get about 1 cent, 97 pips. And you can set your stop loss to be, let me just do the ATR. So on ATR times 2. Now in this scenario, it's saying 91 pips. I mean, that's on the daily time frame. You can shut it down to 30 or 15 minutes time frame and see where your this thing will be. Actually, let's go 4 hours. That's kind of short. Let's go 1. Okay, let's use the 1 hour ATR value, for example, because it seems quite reasonable. So 18 pips times 2, that will give us 36 pips. So your stop loss should be about 36 pips wide. And if you go in from the 20 EMA with 36 pips, you will be somewhere around here for your stop loss, and price should not really go there. If it comes up, it's probably going to rate people around this zone, and we'll still give you like a leverage of 4 or 5 pips before it rates you. But to be on a fully safer side, just put a 50 pip stop loss and you should be perfectly okay. So Euro JPY, so that's also short. Your exit is most likely Friday, but you can exit you can exit on Thursday or Friday if you feel for that. So let me see. Let's still go ahead and drop. I'm gonna check BTC in a second. Just give me a while. EuroCAD from technical point of view, I guess it might be shooting up. Yeah, that's the thing. Technical part of view sometimes might look like that, but what you want to understand is what drives the market isn't technicals, right? What drives the market is fundamentals, the supply and demand, right? So if you know that, for example, you have something in your hand, right, and a lot of people want it, and nobody out there is supplying it, right? You can bump up your price as much as you want. That's the same tactics that went for Bitcoin, right? So a lot of people want Bitcoin, but Bitcoin is capped to a certain number of coins that can be made. So that's why the value keeps increasing. All right. So same things apply for Euro right now. Technical can look like it's going up, but if the supply and the demand chain is showing something different, you want to go with the supply and demand chain, which is the fair fundamentals. Yeah, I'll check on NASDAQ in a second. Thank you very much. Right. I mean, from the day I've been trading with this, I tend to pay more attention to the COT report. Because they're the big boys, they have the money, they have the finances to push, and by law they're legally required to actually publish what they're trading. So hence why I would still stick to Euro going short. Okay, right. So Euro JPY, that's that. Euro USD, I mean, looking at the entire corner, most likely Euro is going to lose strength. Euro USD doesn't really look good. I wouldn't even touch that. So Euro CAD, we got that sell, we got that buy. No, we're not going to touch that. What we're looking for is just something smooth. Once we can find something smooth, that's what we're going to capitalize on. So Euro GBP just got 2 days. After that, I don't want to touch that. Euro AUD. It doesn't really look good on Euro AUD, so I'm going to let that slide. And Euro NZD. Down, up. No, Euro NZD doesn't look good. So that for Euro, these are the only two that actually looks very good and support what we're doing at the moment. In terms of riskiness of this trade, for example, I can check the daily chart. Now from the Williams is actually showing a massive buy coming to, the Euro JPY. But then again, if the COT is showing sell, if the seasonality is showing sell, the probability is showing sell, and this one is just showing buy, I'll just classify the trade as being medium risk. So that way I'm more precise with my entry, right? And Euro CHF, I like to categorize this trade that way. You know the type of effort or type of attention you want to be paying to your trades. I mean, every single trade you want to pay good attention to them, but if you classify at a medium risk, you don't have to exert too much energy before you find an entry. But if it's a very high risk, you have to be very precise with what you're doing. So that also falls on that medium risk because of the William is actually showing a buy power. So I don't know if that's what you saw in terms of the technicals I showing buy. I mean, most of the other technicals like RSI stochastic is probably going to show oversold already, and you want to pump to the upside. Well, remember one thing: once an action is in motion, right, it's very difficult to stop it. So once the train is moving, it's very, very difficult to stop it from going in that direction, and you never really know when it's going to stop. All right, so that's that one. So let me go to the ones that you guys have required individually, so I don't waste time. So we'll go GBP USD now. Let's check. First thing I'm going to check is the COT report for GBP and COT report for USD. So get that GBP COT and USD COT. If we find a good size movement in both or in one, then we might have a trade. So from the USD from the get-go, we didn't see not much. So let's wait for the GBP. It seems to be taking its time to load. All right, so GBP has 3,000 in position there. These guys are also had in position to the long side. Maybe both of them might be right one time. Ideally, I like to have them in the opposite end of the spectrum. I like to also look at the graph to see how much, how much movement to expect. From what I can see anyway, from here, the drop that's dropped from right here and here is just playing out. So that drop is just literally playing out. So this will be a little pullback on the futures. Let's see what overall GBP will look like on the seasonality. If we can see a good move on the GBP on the seasonality, we might be able to trade it. So far, it is pointing. It's pointing long, by the way. So we want to strengthen the GBP. All right. Doesn't look as if it's going to have strength, to be quite frank. It looks like it's going to be weak. So if it's weak from the seasonality, but it's strong on the COT report, ideally I wouldn't touch this. But let's see what the USD seasonality is saying. I mean, from the USD seasonality, USD should be going up. USD should be going up from tomorrow as well. It should be going up for a while anyway. So, but let's look at GBP USD first from a technical aspect. Yeah, so USD has actually been going up. So you can see if USD goes up, definitely GBP will go down. That's what's happening right here. So USD has been going up, GBP is going to be going down. So the move started on 21st, or maybe what date was this? 20th, 21st. So if we look here, 17. Yeah, so right here, 20th would be the date from this one. I mean, seasonality predicted on the 17th, but so many factors could have been in play, and the move delayed to the 20th. And from the 20th right here, which is the same time that this got to this maximum point, literally, you've been given a sign from 19th anyway that price at the maximum point. So ideally, this move started from the 19th, which was the maximum point right here, till now, and it's dropped 335 pips. So what we can look at, it actually looks as if following the 5 years more than any other one, I think. Yeah. So I've been following the 5 years. Yeah, been following the 5 years more. So in this scenario, for example, what is being predicted is GBP will keep losing strength whilst the USD gain more strength. So from the seasonality alone, it looks like this asset is going to go further down. But because of this gap that you're seeing right here, I'd be very careful, because price would definitely pull back up for, to clear these guys out, some of the guys holding this position. So ideally, price could come anywhere around here. And if price comes here, I would be patient enough, because price could most likely hit the 20 EMA before then continuing on his move. And obviously, looking at the Williams already predicting the up move coming anyway. So for now, in the short term, what's going to happen is price is going to pull back and try to correct itself. But in the long term, price should ideally come down. I mean, price is done similar to a double bottom right here already. So probably you should see a triple bottom coming in the near future. So you should probably see something like this. Right. So something like that should ideally happen on this asset right now. So, but for now, based on the fact that I don't have that full alignment, I would not touch this asset. Okay, so that's that one. Bitcoin, let's check Bitcoin. Now, with Bitcoin, we have to be very careful because, I mean, once you've missed the initial entry, which was the 25th of September, you know, everything else that you're trying to do right here is literally catch up, you're playing catch up. So, with playing catch up, you have to be extremely, extremely careful. So Bitcoin has gone up. According to what I'm looking at here, anyway, Bitcoin should ideally make new highs, but we're right here now, right here. So there should be a drop to the 10, but now I can't really say much, or I can't really confirm this as medium. I literally confirm almost all Bitcoin trade as high risk because we do not have that much data backing it up. I can look at the COT report for Bitcoin and try to see what we can find in terms of maybe the commercials are buying, but in most cases, these guys are not really acting that much. But what I can see is over time, they're becoming more invested into Bitcoin. So the market movers in this scenario is more of these guys. These guys are the one moving it. So, and from what I can see here, they're going long, right? So if this is going long and what's it called? And the seasonality is pointing short for now, but ultimately going long, I would just wait. I'll let Bitcoin do whatever it wants to do. It's in a very weird state at the moment. You can see it right here based on the historical figures. It's in a weird state. So you don't want to really touch it around this stage. You just don't want to be doing the yo-yo move with it. Just wait for it to when it gets back here on the 23rd of November and then just buy and hold it for the for the rest of the year and possibly to the new year. It could set a new high to the new year, but for now, just let it be what it is and don't touch it. Okay, so what else do we have? I hope that really explains. I mean, the assets you're telling me to look at. So EuroCAD from technical point of view. Okay, I think I've explained. Oh, EuroCAD. Let me check. I thought you were actually talking about UFCHF earlier on, but apologies for that. So EuroCAD. Yeah, I mean, price is consolidating right here. You're correct. Price is consolidating right here. I mean, from a technical point of view, Williams is also pointing up. What you want to do from a technical point is for price to break to the higher side and then, move to the next EMA, which is around here. So, I mean, price is falling quite a lot. So Euro is actually following its seasonality movement. But from what I can see from the Euro, seasonality, the problem with the Euro is, let me see if I can. Problem with the Euro now is, let's see. The move started from the 17th, right? That's when ideally Euro should have started dropping. So it's meant to drop up until right here, the 11th. So I don't think the down move is completed, right? It's been falling before, way before time. So what's going to happen in this asset is I would just let this asset be. It's consolidating. When an asset is consolidating like this, you want it to come out of the consolidation state. So you want it to ideally break above the range of consolidation, right? So you want it to break above or below these points. If price breaks above here, wait for the retest, then buy. If price break below here, wait for the retest, then sell. But right now, just let it do its consolidation, unless you want to be riding from one end to the other, and that could be risky because eventually price could then break out and go against you. So I would stay away from EuroCAD for now. Okay, and which other asset do we have to check? Nasdaq. Okay. If you guys are making money from Nasdaq, I need to join you guys on it because I haven't traded Nasdaq in a very, 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 very long time. All right, let's see what Nasdaq's saying. All right, so Nasdaq also the same thing applies. the information we have about NASDAQ is quite minimal. It's just the seasonality we have. We only have the 48, 15, and the 5-year seasonality from NASDAQ. So, I mean, those are quite a lot of years. 48 years is quite a lot of years of history to have on a specific asset. But personally, for me, history sometimes doesn't always repeat itself. Sometimes it actually makes different branches. So with NASDAQ, for example, be careful. But from what I can see from the 15 and 5 years, it looks like it's going to drop. And from the 48 years, it kind of looks similar as well. Not that much, but the drop could end maybe, I don't know, on the 11th, or maybe it could just end right here on the 20th. Let me try to see if I can find it right here. No. All right, trying to. Yeah, so basically, this is a tank right now. This is a tank, literally. So the up move for us will have been, ideal entry will have been on the 28th of this month. And if you're jumping around the 28th right here, you'll be fine. You'll have made about 7,000 pips. So NASDAQ is literally at its peak right now, according to the seasonality. So NASDAQ is at its peak on the 7th. On the 5th, it was at its peak on the 5th for the 48 years and also the 15 years. Only the 5 years that looks different. And which that 5th, it literally looks as if it's going to pull back. So if you're on NASDAQ, actually, this would be a very beautiful one to sell. This is the time to short it. It's to short and go, go opposite. But I don't know how long it's going to last for. Ideally, most likely on the 13th, you have to be out though, because it might correct, or maybe because it's been following 15 and 48 years, maybe you might actually get to ride it up until the 20th. But to be on the safer side, you want to come out on the 11th first and then wait for it to consolidate. Then you probably go in on the 17th and then come out on the 20th, so 3 days after. So NASDAQ, for me, in my personal opinion, just looking at the seasonality alone, it's short. And if it's short, it's most likely going to pull back to somewhere around here. So you probably would have at least 6,000 pips to collect from that, 6,100 pips to collect on the short side. And if it drops a 1 to 0 point, if it's 1-to-1 ratio, as if you go with one lot with 6,000 pips, that's $60,000 or pounds or whatever currency you're trading. So that's that one. So is there any further questions, guys? All right. If there isn't any question, this is only the thing I have time to check. So the only other thing I want to talk about to you guys is this tool right here. A lot of people might have a membership. I think this one is the cheapest membership we have for probability, but I don't think a lot of people actually understand how powerful it is. So I'm going to explain it to you. So yeah. NASDAQ is literally the move to get into. I could literally write that down here. Sure. So it's the move to get into for you guys. Yeah. So let me explain this tool right here. If I know, for example, 80% of the time, right, at a specific day in a year, I have the chance to win if I go buy. That means in 10 years, for example, I'm going to win 8 out of 10 trades. 8 out of 10 trades, right? So if I'm winning 8 out of 10 trades, right, overall, that means I have an 80% strategy, right? So the main thing is, if you focus on the years or the dates that have the highest probabilities, right, you can use the probability tool by itself to trade the market and you'll be successful. You don't even have to use the seasonality tool, or the COT report. You just need the probability. So if you know that 80% of the time, if I trade in this specific direction, I'm going to win, then you could just figure out a money management tactic to just trade only at that specific time of the day or of the month, So if I trade here on the 80% and I look around and I find, maybe I don't find all the 80% on this asset, and I look, maybe I find a 79%, I go in with a 79% day, I go in with an 86% day. overall, if I compound that move overall on all the probability assets that we have right here, because we quite have a lot of them, I think about 32 of them, you probably make quite a lot of money. You make quite a good return if you have a good money management for the year, you know? So that's what I just want to say. Sometimes the easiest solution is the best solution. So if you know that you cannot trade and you can't do all this technical analysis, you can't do all this fundamental analysis, stick with the probability, pick a specific date that you can find the highest probability on, and just trade exactly on those dates. Some of them you win, some of them you lose. But if you lose, and if you have a good money management scheme, let's say, for example, you're using the martingale scale or the reverse of it, you'll be perfectly fine. So if I trade today and I know that, okay, I lost 20 pips today and I have another trade tomorrow, which is another 80%, and I had 50 pips on that one, and I have good money management, the 20 pips that I lost will feel like nothing. Even if I lost 50 pips on the first day and I won 25 pips on the next day, if I have a good money management scheme, that 50 pips I lost will be like nothing. Okay, I just wanted to point that out. Keep it simple and trade simply. Okay, so that's it for today, guys. NASDAQ seems to be one of the best ones we have, and thank you for calling that up. And this is the rest of the trade. So have a lovely trading week, guys. If you have any questions, shoot me a message on Telegram, and we'll take it from there. And if you need a membership, just go on the website, business.damempire.co.uk/pricing. You can get it there. All right, guys, have a lovely trading week, and catch you soon. Take care.